Okay, welcome everybody. Welcome to the first Colored Money live stream. So let's get through the formalities first. Our aim for this channel is to provide our financial opinion on any sort of topic, financial topics, entrepreneurship, business, investing, the topics that we like to discuss and like to talk about. We are people that have experience in some of these topics and some of these avenues within the financial and business industry. Let me start by introducing myself. I'm Rian ZAR, aka Booby. So you'll hear Brandon and a couple of the other guests refer to me as Booby or Boobs. That's my nickname. Actually didn't mention what the name of the show is, but you probably saw that already. It's called Colored Money. The reason we called it that is because in South Africa and Africa as a whole, we've got many different races, people from different cultures, different backgrounds, and colors are, as you know, there are many different colors, right? So that's me. I'm an accountant by profession, a hustler by belief, if I could say that. And Brandon is the more professional economist. But I'll hand over to you, Brandon. You can introduce yourself.
Awesome, thanks, Bobs. My name's Brandon Sachs. Sure, yeah, my background comes from tax, economics, accounts, trading equity markets, forex markets, bond markets, so a wide range of skill set, a jack of all trades. So yeah, looking very forward to our time, to the channel. Hopefully it provides a bit of guidance, a bit of interest. We're not going to be here to be your lecturers. We want to talk about real world situations, give you guys sort of a breakdown, and easy to understand lingo, I suppose, and happy to answer all your questions in the comments. And yeah, hopefully you guys will get something out of this. Hopefully you'll be able to make some money. Like Boop says, it's all about hustling. It doesn't matter whether you've got a degree or whether you sort of start your own business with no degree. Everyone's hustling.
Awesome, thanks, Brandon. Yeah, as you can hear, Brandon's the one that's a lot more professional than what I am. I am just learning as I go along, learning through my failures and my wins as well. But like everybody out there, we don't give up, or like most people out there, the only way you can succeed is if you don't give up. So heading over into the topic of this particular video, we wanted to discuss inflation and inflation in South Africa. I guess not just South Africa, but on the global perspective as well. But mostly coming from a South African perspective, maybe we could show that chart, producer or John Michael. We could start with the inflation chart. As you can see, right now, inflation's at around that 4.5% mark. I'm looking at 4.5%. Brandon, in your opinion, just from a quick glance at the chart, are things looking good? Are things looking bad? Do you think it's going to get better? We can always look at the CPI charts and PPI and other factors that impact inflation. But in your professional opinion right now, what do you think? Where do we think South Africa is going from here? Let's say the next year and a half, 2 years.
So I think we first go look back at 2020, right, with COVID, which was quite an anomaly where the whole world shut down for 6 months, which means that no one was buying anything. You couldn't go to the shops, you couldn't drive your car, there were no airplanes in the air, so there was no fuel purchases. Yes, there were grocery purchases, but not to the extent that there was pre-COVID, because people just weren't going to the shops. And yes, you could buy stuff online, but it still wasn't to the extent that it was if people were going into the shops, to the grocery stores. People weren't buying clothes, people weren't buying the luxury goods. So the whole world sort of stopped for 6 months. So what that did was, that put a cap on spending, so that the money in the economy just sort of dried out and stopped, which led to deflation, right? So what that means is, because there wasn't money going around in the world, the prices of the demand for certain products dropped, right? So when demand drops, prices drop, because obviously your retailers want to get you to buy more, so they drop the prices. Whereas
Sorry to break your word, Brandon. So basically, you're giving the explanation of what deflation is, right? Giving the difference between deflation and inflation, just for the people who are not necessarily as financially savvy, some of our viewers right now.
Yeah. So I mean, so deflation is just when it's just inflation but going lower. It's just deflation. It's going the other way. Whereas inflation, prices are going up. Deflation, prices are theoretically coming down because demand.
And that's because demand. Yes.
Yeah.
Okay.
So because there was no demand in 2020, right, for pretty much anything, we saw a lot of deflation. So prices were dropping. So what that did was that led to a place where interest rates started becoming important. It's very important. So we got to look at how do you in a world of inflation, how do you protect against inflation going too high? So for example, like Zimbabwe, where they've got hyperinflation, where inflation sits like 2,000%. So we don't want to get to that point, right? So how do we guard against that? So the Reserve Bank guards against hyperinflation by increasing interest rates. So by increasing interest rates, it keeps inflation lower. Now the reverse or the opposite happens for deflation. So when there's deflation, the Reserve Bank will drop interest rates because they need to try and get the economy moving. They need money flowing in the economy. So if you are paying less interest on your house or less interest on your bond or less interest on your car or your credit cards, it hopefully will sort of be a bit of stimulus where it will entice you to go out and spend or buy, right?
Yeah.
And by you buying, sorry, carry on, Boobs.
So if I could just step in, so just for the watchers or the subscribers, what Brandon's saying in a nutshell is that with the Reserve Bank reducing interest rates, they are, like you said, encouraging spending because the people will then find it easier to actually apply for credit and to be given credit. Loans through banks, loans through banks and other credit providers. It would be easier to come across those loans, and that in turn would stimulate the economy because majority of economies around the world are stimulated through credit, right? Through credit purchases. I mean, credit is effectively money. Credit is more money than what cash is, if that makes any sense. So sorry, Brandon. That's just what I wanted to say for the viewers. I'm sure there were some people that probably would have lost us and lost you with regards to your explanations. But you can continue with what you want to say.
It's actually really simple. So you just got to remember that inflation. When there's inflation, there's increased demand for products, right?
Yeah.
When there's increased demand for products, prices are going to go up. Just think about it. If you're an entrepreneur, you're selling T-shirts. When there's an increase in demand for your T-shirts, you're going to increase the prices because you've got more people wanting to buy your T-shirts. Okay, so you can increase your prices. However, when people are not buying your T-shirts, you start dropping your prices or you start giving specials of a 2 for 1, buy 2, get 1 free, that type of thing. Because you need to start trying to entice people to spend to buy your T-shirt. So inflation is a difficult beast because it really is an animal. It controls the world, really. It controls central banks all over the world, inflation. They're all trying somehow to either cope with inflation or cope with deflation. I might be getting a little bit ahead here, but just sort of work with me. In third world or emerging market economies, we have an issue of inflation, right? In first world economies, America, the UK, Japan, the like, they've got issues with deflation. So our biggest problem now, as you saw in that graph, is for the last couple of years, decade or so, we've sort of been very much around that 6%, 3% level. We sort of, our inflation fluctuates between that, right?
Yeah.
However, last year, because of COVID, we dropped way below the 3% barrier. So what we had to do, or what the Reserve Bank had to do to stop deflation, was to drop interest rates. So that to stimulate the economy by dropping interest rates.
So that people, to encourage spending, because people were hoarding their cash, basically, or hoarding their money, and that's not good for the economy. When people don't spend, that's not good for the economy. Am I correct in saying that? When people don't spend, it's not good for the economy. And I mean, there are multiple factors that actually impact your let's say your consumer price index as well. I mean, you correct me if I'm wrong. That's your exchange rate could have an impact on that. I mean, obviously, domestic spending has an impact on that. There are multiple factors, but maybe we could get into the CPI chart now as well, seeing that we looked at the inflationary chart. John Michael, I think there should be a CPI chart over there as well.
The CPI chart is inflation, is the inflation chart.
No, but wasn't there a separate chart, CPI, or was it the PPI chart? Sorry, my apologies. It was a PPI chart.
The PPI chart is, so producer price inflation in South Africa is not that important anymore as what it used to be, because producer price inflation was important when we were a massive commodity mining country, which we still are to a certain extent. But when we were manufacturing a lot of goods in South Africa, when we were mining and producing gold, platinum, palladium, then producer price was very important for our economy. But as we've sort of gone, and a lot of the mining companies have left South Africa, and we're not as big a gold mining, as big a platinum, as big a palladium miner as we used to be, PPI doesn't really affect our economy as much. Yes, it's still important because obviously it determines if producer prices are going up. Obviously, we're going to see, companies like Tiger Brands or your Astral Foods or wherever your producers are increasing prices, which obviously then flows into, what you go buy at Woolworths or Pick n Pay. So yes, to a certain extent that is important, but PPI is not, it doesn't hold as big a sort of importance or an important factor as what CPI is. CPI is the main driver and the biggest thing as a consumer that we need to focus on and be worried about.
But if PPI increases, because that's essentially the cost to the producers or the manufacturers, right? Let's say that. If that increases, I'm looking at the chart now. I mean, if we look at from June last year, it's shot up from, I can't see what our low it is, but I mean, it's probably like 0.3, if I'm not mistaken, to all the way up to, what's that, nearly 8 right now. And I mean, that shows a significant increase in the PPI. So obviously the producers their costs have increased significantly. Does that then not, what's the word I'm looking for? Does that not translate into an increase in CPI? Because I'm sure that the retailers their cost would then increase because the producers would potentially increase their costs to the retailers, who would then have to increase their costs to the consumer. So it does. Should we not see a CPI following the trend of the PPI as well?
You will, but they're separate. They don't really. I wouldn't say they're really like intertwined. Yes, they're
not 100% correlated.
I wouldn't really call it the correlation. Like I said, it's very PPI is important, but it's not as important as what it used to be. And it will become important again if South Africa becomes a bigger producer of whatever. Are we producing? Are we producing metals and are we producing, what sort of foodstuffs are we producing and things like that? So the farmers. So if you take the farmers, for instance, they obviously look a lot at producer prices, right? The farming community. Yeah. And their PPI is more determined by have there been droughts, right? Because if there were droughts, then you're going to see PPI increase, which is actually why you see in the graph the spike there, because the previous season there wasn't a lot of rain in the areas in the big farming communities. So we saw a lot of issues with cattle. We saw a lot of issues with livestock, a lot of issues with the planting, the harvesting, whatever it is the farmers were doing. So that's why PPI also spiked like that, because obviously their input costs increased as farmers.
Mm-hmm.
And that's why you see that spike there.
That jump.
But
Okay.
CPI is what the Reserve Bank looks at when they determine are they going to increase or decrease, hike or drop interest rates. CPI will determine what your bottom line is when you go to the shops every month.
Yeah.
In terms of your grocery bill, it's going to determine what happens with the fuel, what you put in your car, petrol and diesel. Inflation is the most important thing that, as a consumer, as an individual, you need to worry about. That's where your focus needs to be. If inflation goes above the Reserve Bank's band, so the Reserve Bank has a band of 6 and 3%, that's where they like to see inflation. If anything starts going above that 6%, 5.5%, 6%, then you need to start getting worried, because you probably then got a Reserve Bank who's looking to hike interest rates to keep that under control. And obviously, if we hike interest rates, that then has another follow-on effect on your personal finances.
And I guess as an emerging market economy, the only tool that our Reserve Bank really has are playing with the interest rates, right? I mean, we're not necessarily the US where we can just print money left, right, and center, because, I mean, that will have a significant impact on our sovereignty in South Africa. We don't want to become a Zimbabwe, like you said earlier on. Do you think, with all the money printing that went on in the US and other countries in the last year, and that's still continuing to go on, do you think that's going to significantly or adversely impact South Africa and other emerging market economies moving forward? I mean, I know that with the amount of dollars they're printing, we actually saw the rand strengthen over the last. I mean, I think since June last year, it came down from 20 rand or 19 rand to now 15 rand. Do you think it's going to get worse, or do you think it's going to get better?
Sure, it's so
difficult. I mean, it's a very wide it's a wide range question, I guess.
Let's look at the 2008 crash. So remember the banking crash in 2008, the subprime issues. So that was the first crash where central banks came in and just said, we're going to print as much money as possible, and we're going to stimulate the economy as much as possible, and we're just going to throw money to the public, and hopefully they're going to keep spending, right? And we're going to drop interest rates like crazy to the point where America's interest rate sits at like 0%. Japan sits at negative something. You actually have to pay the Japanese banks to keep your money. That's essentially what deflation is. So they're sitting with negative interest rates, okay? So they can keep on printing money. When you've got inflation or deflation and you've got interest rates as low as what these first world nations have in Europe and America and in Asia, remembering that China is not a first world nation, eh? So China, although is the second biggest economy, China is not a first world nation. So I'm not referring to the Chinese when I say first world nations. But they can print as much money as they want. They can buy up as many bonds as they want. They can stimulate the economy by printing money like it's going out of fashion. And since 2008 until now, they print money. It's ridiculous. In fact, I can probably even show you stats that, I mean, the amount of money.
I think they printed something like 35% of. I think they printed something like 35% of all the US dollars ever printed were printed in the last year alone.
Yeah, I mean,
35% of them.
It's mad, and it hasn't done anything to the economy in terms of interest rates and inflation, right? Because it's just so low, so they can keep printing. But printing money does lead to issues later on down the line, because someone's got to pay for that bill. Somewhere that bubble has to pop. And that's what everyone's been saying. Everyone's been calling that bubble to pop since 2015, 2014. But as long as inflation remains low, as long as interest rates remain low, they can keep on printing for as long as they want. But here's the kicker, right? So this is where the problem starts. American, or should I say first world nation stock markets have been flying. They've been taking off. They've been up 15, 20, 30, 40, 50%. I mean, S&P is up 100% since its lows of 2020, okay? So you would have doubled your money that you invested sort of June last year or even before then.
But what was a
Why?
70-day recession or something?
Yeah. But the reason that's happened is because people are printing money. So it's free money, it's cheap money. So people just keep on investing in companies. They're investing in the stock markets because it's great. However, when interest rates in the first world nations, specifically America, start to increase, and this is the big talk, right? The big talk in the world at the moment is, when is America going to increase interest rates? When are they going to start tapering their bond buying, the printing of money? They're going to stop tapering their QE, the quantitative easing stuff. As soon as they start doing that, all of a sudden the whole world is going to change. People are going to take their money out of the risky assets, which they see as stock markets. So investing in Apple, investing in Amazon, investing in Tesla, people are going to pull their money out of that because that's seen as a risky investment, and they're going to put that money into the banks because now they can get 5% or 7% return in dollars from a bank, risk-free, versus investing in the stock market, which higher risk, high reward, but people don't want to do that. They want to take their dollars, they want to put it in the bank, they want to get a 5% return in dollars or 7% interest rate return in dollars because it's risk-free. Once that happens, because remember, as interest rates go up, the banks increase their interest rates, which means you get a better investment on what you've put in the bank, okay, in your money market or your fixed term deposit, whatever it is. But this is now we're talking America, right? So then all of a sudden the dollar is going to strengthen, okay? Because now people are putting money into the bank. So the dollar is going to strengthen hard. It's going to fly. It's going to take off because everybody's going to want dollars. The world's going to go crazy for dollars. It's going to go dollar hungry. And all that's going to do to the emerging market economies, and South Africa specifically, is devalue our currency further, okay? So we could see the rand going to 15.50. We could see the rand going to 16. I don't think it'll go higher than 16 because, again, there's other factors that play into the rand depreciating and depreciating, which we can get into later videos and things like that. I mean, there's so many factors that impact the economies. So essentially what we just have to look at is, are America going to start increasing interest rates? Yes or no? If yes, what does that mean for South Africa, or what does that mean for our economy? If no, what does that mean for our economy? Are we going to keep seeing central banks around the world continue to print money? I think we are. Till what point? I think it's going to be indefinite. It's going to be to a point where people or central banks can keep doing it. I mean, it's as long as inflation is low, as long as interest rates are low, they're going to keep doing it. So, but that's the biggest thing now. People are saying, if you look at what happened in 2020, again, there was deflation, inflation dropped to crazy lows. Interest rates are at record lows around the world. But now the economy is turning around. Things are moving again. Airplanes are flying. So that means that there's fuel required, there's oil required. So now the oil price starts going up. There's demand for things. There's demand for groceries. There's demand for luxury goods. There's demand for Louis Vuitton handbags. There's demand for everything again. People are buying again. So that means prices are going to increase. And if prices increase, inflation increases. If inflation increases, interest rates will follow and increase. So that's just what you got to watch for. It's a timeline thing. That's the biggest question now is when it's going to happen. Is it going to happen next year? There's a good chance. Is it going to happen the year after? Definitely. So it's a time frame thing. There's so much to look at.
That's awesome. So I think that thanks for that, Brandon. I think the message we're probably trying to get across is that interest rates are not going to stay low forever, and that's probably what we need. We would like our viewers to take back with them from after watching the show. Yes, now's a good time to get your credit, but use your credit wisely. If you can qualify for, let's say, a R1 million car, don't take the full R1 million. Rather, purchase a car. I mean, this is not financial advice; it's merely opinion. But don't purchase a car that's your at the maximum of your means. Purchase something that's maybe 70% of the maximum allowed amount that you can qualify for. because that gives you a bit of room to play with for when these interest rates start going up again. Because it's like you're saying, it's inevitable that they will have to go up. That money needs to go somewhere. And in ending, I think that we need to realize that we as South Africans or African and emerging market economies, we are really at the whims of the superpowers. I mean, whatever they do, or basically the US. I mean, what the Americans do, yes, we can change things and implement things in our own countries to sort of stimulate our economy and to improve spending or discourage spending if we spend too much. But we are still at the whims of the US. If that's my opinion. I mean, Brandon, you probably tell me if I'm wrong, and please do tell me if I'm wrong. But I think, yeah, we need to take heed from the fact that the US will decide what happens in the rest of the world by their decision making with their central bank.
Yeah, 100%. You're 100% right.
Yeah.
It's but again, like you said, we're not trying to give you financial advice on what you should do, but you make such valid points, because everyone gets told now, oh, now's the right time to buy property, now's the right time to buy cars when interest rates are low. And yes, it is. Go buy yourself a property. Go investing in property is brilliant. It's fantastic. It's the right thing to do. But don't go, like you said, to the max of what you can afford, because in a year's time, that house is going to cost you here. It's not going to cost you that anymore. So you've afford that, your house costs you that, but next year now your house costs this. So you've got the shortfall now that you've got to try and cover. So what I would say is try to pay down your debts. Because interest rates are lower now, if you've got credit card debt, pay it down. Get it down. If you've got extra cash lying around, pay your credit card debt down as quick as you can. Try to get your bond down a little bit lower. Yes, I know there's a lot of saving property investors that will maybe tell you a little bit different, but again, that's another video, that's another day. But try get your debt down. I mean, it's especially your credit card debt. Your credit card debt is that unsecured lending debt. I mean, they charge you like what, 10, 15, 20, 25% interest.
Imagine when they start increasing those interest rates. I mean, it's a link. It's gonna skyrocket. Yeah.
Yes, I mean, exactly. Pay down that unsecured lending. Try pay back your student loan. Try to get that done as fast as you can. That's what I would do. In this sort of environment. If I got spare cash to go buy a property, I would do that. Would I go buy a car on credit? Probably not. If I had a choice between car and buying a house, do the house.
Yeah, no. Unless you're buying a car on credit where your monthly installments are actually significantly lower than what your previous installments were, then I guess it makes sense, because then you're increasing your disposable income, for now at least. But I mean, that's another thing that you could do if you can't manage to decrease you are increasing your credit and increasing your monthly responsibilities with regards to your installment payments, then find ways to make extra income. I mean, that's a topic for another discussion as well. But thanks, man. I think we can end it off over there. Before we actually go, please, everyone, note, I'll say it again, this is not financial advice. It's merely our financial opinion. I'm not a registered financial advisor. Brandon probably can give you financial advice, not me. But yeah, it's merely our opinion. Take it, use it, don't use it. I think we can end off there. Thanks very much, everyone. We might put up a poll just to find out, maybe giving you guys a choice of one or two, two or three topics of what you'd like us to discuss in the next video, next show or two. But we'll get to that. We'll put up the poll. We'll still discuss that.
What we can maybe do as well, Bobs, is we can also look at sort of a situation, because every demographic is also different, right? Because I speak from a white privilege position, right? So, there's a lot of demographics. Like I've got a lot of my black friends who, the way they run their finances or need to run their finances is very different to the way I would look at it. So the sort of advice I would give them, and we maybe need to delve into that, and the same with the colored community, the Indian community, we know the Indian community, the color community, they're very entrepreneurial, you know, so they like to start businesses, and you know, so we can delve into the different demographics, the different races of how each demographic runs money, and where the opportunities lie, and maybe where the mistakes lie, and where we can sort of maybe help, you know, sort of grow, because that's the whole point. Is we want to see everyone above that middle class line, right? You know, at the moment, you know, the poverty amount, our middle class it's like almost non-existent.
It's shrinking. Yeah, exactly.
You know, and you can't run a country without a middle class. So we need to find ways where we can help every demographic, every race, every gender, every age group, you know, find ways to generate income. You know, and sometimes generating income is cutting costs. Sometimes generating income is starting a new business. You know, there's different ways to make money, to save money. And we can all do it. You know, there's no, just because you might not have the means now doesn't mean you can't take a step into that into that direction. So hopefully that's what we'll do here, is that you'll take some sort of inspiration, sort of guidance, and take from our stories, our backgrounds, and and let's see everyone make a success of their lives.
Perfect, 100%. Let's hope that the series of videos that we do at least influences 1 or 2 people. I mean, that's 1 or 2 people more than what is right now, that could become entrepreneurs, that could become investors, that could become millionaires. Let's hope so. Please like and subscribe, share. If you like and you subscribe, obviously that helps the algorithm, the YouTube algorithm, and that gets the video out to other people that might be interested. And I mean, that this video could hopefully help other people as well. Thanks very much. I think we can end it off there. Thanks, Brandon.
Cool. Thanks, folks.